morning. This is George Tkaczuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Okay, for now the market uptrend continues. However, we're a bit at an inflection point where you're going to start hearing a lot of opinions whether the market's overheated or we're just going to explode to another upside. And some of the arguments are that we've seen some money inflows into stock mutual funds at the beginning of this year. So people are saying that the retail investor is returning and the retail crowd usually gets it wrong. So the market must be topping out right now, especially with the Dow hitting 14,000 last week. Converse to this argument is that, well, we might just be at the start of the fourth leg of the bull market that started in March of 2009, and fourth legs are supposed to be very powerful. Well, the important thing here is kind of disregard all the noise, all the opinions. Don't believe anything I really say. Just look at the price and volume and see if this confirms what's going on in the markets. And right now, the price and volume is confirming that the uptrend's intact. We had the Dow take out 14,000. We're down below that this morning. However, the volume's running about 26% lower than it was on Friday. Now we had the S&P above 1,500, closed above there last week, still above those levels. So that 1,500 should act as a support level. The next one below this would be about 1,475. Now on the upside, 1,550 would be resistance on the S&P 500. Now, as far as the NASDAQ goes, it's still holding support at about the 3150 level. The next support level below this would be 3080. It's held that very well. And last week we entered the so-called resistance zone between 3175 to 3200. Now, as far as money flow into the stock equity mutual funds, this year, if you look at Investment Company Institute's webpage, they say for the first 3 weeks of January, we saw about 16 billion come into domestic U.S. stock funds. That's really pretty small compared to the 405 billion we saw leave stock funds since about 2007. So I don't really think this is an overheated or game changer just yet. Now, as far as earnings go in the S&P 500, of the half companies that reported thus far, a little over 69% have beat expectations. This is running pretty much above average since about 1994. So there is possibly some potential upside. Okay, so what are some of the plays we're looking at? Well, the rally is getting pretty much broad-based. We're still in that building theme. Home builders, all of them came off a little bit. But some of the stocks we're looking at is the mortgage service companies. There's three of them in that space that are pretty major. It's Nationstar, Walter Investments, and Ocwen Financial. Ocwen Financial has pretty much caught my eye. It's been consolidating since October. We hit a high right just under $40, and then it's pretty much corrected since then. And right last Thursday, it tried to break through its first buy point at 39.25. It went through there in about 80% increase in volume. It's meeting resistance at $40. So what you can do is you can play the stock. It's right about above 39. You can play it right here, or you can wait to see if you can take out that 40 resistance on big volume. Ocwen Financial over the last 2 quarters has earnings coming in at negative 48%, positive 28%, and positive 95%. Sales have been up 90% and up 100%. Estimates going forward for 2012 actually are supposed to be about 86%, and for 2013 coming in at 212%. Mutual funds have been accumulating the stock. It's showing some good accumulation, big volume coming in supporting the stock. Mutual funds have grown over the last 4 quarters from about 320 funds owning the stock to about 430 owning the stock right now. So I think you can play that stock using the stop loss, 7 to 8% stop loss. Now, for full disclosure, I did buy Ocwen on Thursday, and I might be adding 2 shares later on today. So as always, let price and volume be your guide. Watch the markets. This is George Tkaczuk, RCM Wealth Advisors, coming to you from the CME Group trading floor in Chicago. Have a great trading day.